Smiles. Hey, Tom Stewart here. I'm Liz Trotter. Our guest today is Laura Bianchini Pritchett. Got a third name there. Been Laura Bianchini for forever. But this
Yes.
is Smart Business Moves. Laura,
Yes.
how are you?
Good. Thank you for having me.
I'm glad to have you here, Laura. Okay, so Laura, tell us exactly how to pronounce your name.
It's Bianchini. I usually go by Bianchini, but my license is in Pritchett because it's my married legal name. But I go by Bianchini for business.
Bianchini.
Yes.
Bianchini.
Yes.
I was close.
I've gotten it wrong so many times. I think I say Bianchini.
That's fine. I'm a little Italian. Can you tell?
It doesn't seem like it'd be that tough of a name, but it is.
Yeah.
I forgot it already. Bianchini.
Bianchini.
Bianchini. All right. Now, this accent is on the third syllable. Bianchini. Yeah. All right. Yeah. I got you. And I write that down. That'll be helpful. All right. So now that we got that out of the way.
Well, thank you for being here today, Laura. It was a great show.
Don't be smart, Alec, Tom. Okay, but when you introduced us, did you say that you were Liz Trotter?
That I was? No, I was with Liz Trotter.
Okay. I'm going to go back and watch this. I think you said I am.
Well, I know what I meant to say. How about that? I don't think there's many people that are going to
pick up on
confuse me for Liz Trotter.
No, I don't think anybody will. That would be shocking. What are we talking about today? Do we have any kinds that we have to look at first, Tom, before we jump in?
Well, interest rates are coming down. Producer price index numbers came out today. They were a little cooler than what was expected. Consumer price number index was lower last week. All these predictions of interest rates going up, and, us having some type of recession towards the middle of the latter part of next year. I mean, that's not off the table at all. It's still a real possibility, but the probabilities are less. That, the idea that we can get inflation in tow without completely crashing the economy is becoming more of a possibility, which I guess is a good thing.
Yeah.
And kind of surprising too, right?
Mm-hmm.
Yeah.
After everything that we've done and gone through, it's kind of surprising. I thought that the recession was sort of a natural outcropping. I thought, all right.
Right.
But maybe not.
Yeah.
Of course, there was a school of thought if we did have a recession, and typically recessions kind of go along with higher unemployment rates, to make it easier for service companies like house cleaning businesses to attract talented labor, that might not come to pass either. So that's kind of the good news, bad news part of this.
Yeah.
We are seeing a lot of people in my circles that are struggling this month with client cancellations, not skips, but actually canceling their service. And we haven't seen that in a while. So
isn't that kind of, looking back over the years, something that Laura, Liz, and I have the luxury of doing because we've done this for a while. As a rule, though, wouldn't you expect to see cancellations in January?
So it's more than the average. So everybody sort of is looking for some cancellations in January after the holidays, first of the year. But everybody kind of has an idea of how many they're going to be losing based on previous years.
They get their credit card bill. They go, oh, my goodness, what did we do? We've got to make some changes around here.
Yeah. But the numbers seem to be higher than people were anticipating this year by quite a few people, too.
What do they attribute that to?
People are nervous about the recession. That's what they're talking about. So I don't know. We got a fancy car in my yard right now. I'm like, nobody's getting out. So. Yeah, nice.
Tim buy something and didn't tell you?
Nah, he wouldn't do that.
Mine would. Mine would for sure.
This is the funniest thing that when people ask how long we've been married, I think this is a really good way to describe it without giving a date. When we got married, we made an agreement that we would never spend more than $50 without talking to the other person first. That was a lot of money.
I was going to say, you're not even buying eggs right now, are you?
Yeah. So every time somebody goes to the grocery store, you're making a phone call to the other and saying, "Okay,
There are some things that are okay, like groceries. You can always
can I get milk, bread, and eggs today?"
all three.
Yeah.
It's been a while. That's how long we've been married.
I love it.
People usually get that. They're like, "What? You mean 5? No, 50." All right. So that kind of takes us into what we're going to be talking about, I think, with Laura, believe it or not. Kind of a strange little transition there, right?
Yeah.
Laura, you haven't been on Smart Business Moves for a while. It's been a while. I guess
It has been a while.
For starters, you want to just kind of share a little bit about yourself?
Yeah, sure. So I am Laura Bianchini, and I have been with Moody Insurance for a little over 30 years now. And I specialize in implementing, pretty much implementing, monitoring, and working with associations, franchises. And I do a lot in the janitorial, residential, and commercial world. It's a niche for me. So I've done it for many, many years, and I love it. So luckily, I'm happy to be here. I get a lot of questions. People are always welcome to call. We're based out of Maryland. We write nationally, and I can just answer questions for people off the fly. So if they're having a problem with their insurance carrier, sometimes like what to say, what questions should we ask, that kind of thing. Like if there's a claim scenario, do you have any suggestions that you can throw out there? And I will help, especially anybody that's a member or just in general that's a referral in. So anybody that needs to reach me, they're welcome to come out and talk to me.
All right, y'all, you heard that, right? And that is such a generous offer.
Yeah.
When people are going through something that looks like it might turn into a claim, they're scared. People are really this. They don't know who to talk to. Who can you trust? They're afraid to call their own insurance company because
absolutely. And Liz, I'm so glad you brought that up, because one of the biggest things I tell people all the time is that I want none of our claims go to our insurance carriers directly ever. Everything in our office comes to us first. I want to see it before the insurance carrier sees it, because sometimes it's a difference on how something is worded, whether something is covered or not. And we just want to know the details and if there might be something else that we need before we get things reported and get set up. And it is important to have that person to call for the what if situations or smaller things that you don't want to go to an insurance company. Maybe you want a third party involved, where for my customers, I will make phone calls, third party. And it just removes the business owner from having to deal with something, and it's helpful. So.
All right. So I have like 3 things that are worrying my mind. But the first one is I want to go back to something you said right in the very beginning when you said that you love this niche. Why?
I did.
Why?
I love insurance. I don't know how that exactly happened, but I feel very fortunate for it. But I have become a complete nerd in this world of forms. We have been very fortunate to where we've been able to manuscript our own forms. We have our own insurance program that we put together with an insurance carrier that's only ours. Nobody has access to it nationally. So we're very careful of who goes in, who comes out, who we have to clean up somewhere and then put back in the program. But it's all a game of numbers with these insurance carriers and just the relationships. And luckily, because I've been in it for so long, it's the relationships with these carriers and underwriters. So a lot of my submissions will go to the top of pile when they're working on things for renewals, for new business. So I just love what I do. Very, very lucky.
Yeah, we can tell. I mean, we can tell that you love what you do.
Well, good. Glad.
You know, I have a question because
Sure.
I think this could be useful. I think most of us think about insurance and we think about, well, I got my company and I buy insurance from some insurance company, but it's really more complicated than that. There's several different parties at play in the whole supply chain of getting
Absolutely.
insurance. And the you mentioned underwriters, you mentioned the carriers. Could you maybe explain a little bit about who all these parties are?
Yeah, so basically what happens is some people can go through what's called a direct writer, which means they can go online, they can purchase insurance coverage, and they're just getting a policy offline and hoping it's what they need. Direct writers can also be like the State Farms, the Nationwides, the Allstates. And it's not that they're bad insurance, it's just a lot of them don't specialize in this industry, right? So in our industry, we have special forms that are needed to protect the business owner that are typically excluded, or they have very low sublimits of coverage if they have any coverage at all. And where we come into play is, as a broker, I have access to 40 carriers nationally, and they're standard carriers, all A-rated carriers, many carriers that you would recognize. I have regional carriers as well, but I also have surplus lines carriers. So when there's a customer that has a problem and needs to clean up their account.
Hold on, you're losing me. You're losing me.
Oh, okay.
So, what's the difference between a carrier and a surplus line carrier, or what's just a carrier?
Yeah, so a carrier is any standard insurance company typically that is licensed to write in a specific state. And each carrier sets their own underwriting guidelines, and all of the rates have to be filed with the insurance commissioner before they're used. That's a standard carrier.
What's underwriting?
Underwriting is each insurance carrier has their own underwriting department to where they will look at an account and see if they think that they can make a profit on it. If they can make a profit, then it's something that they want to underwrite. And then that's how we get our credits. That's how we can negotiate things. Okay. But a surplus lines carrier is someone that we go to that is basically a higher risk carrier. But we could have had just a couple losses that were kind of large that we need to move like a piece of an account or an entire account to them. We clean them up and then we're able to put them back in. And where that's nice for me is standard carriers like Allstate, State Farm, Nationwide. Many of them can only write in their state for a specific agent. Where I'm fortunate is I can write nationally with all of these insurance carriers that we have licenses with. But I also have surplus lines too, where standard carriers or even direct writers don't have access to those markets.
So if I've had a lot of, say, workers' comp injuries, the underwriter might look at me and make some determination that they can't make money on me because I have too many accidents. Is that kind of how it works?
That's absolutely correct. They could say, you have a loss ratio that's too high. It exceeds our underwriting guidelines. And by the way, we're canceling you. And some
that's
carriers,
not true, by the way. My loss runs are impeccable, but nevertheless.
There you go. I love hearing that. I love when people have great loss runs.
But if they won't write the insurance, that's where your surplus carriers come in.
I have access to more than most as far as carriers go.
Insurance companies of last resort, Lloyd's of London, maybe.
Sometimes that's my very last.
That's an extreme, I guess. But,
yeah, that is like super expensive, no coverage. Yeah, just a policy on paper to give you proof of insurance, not a great form. Yeah.
Right. Yeah. You're in pretty bad shape if that's where you have to go to get insurance.
Yep.
Well, looks like that's a little like a recommendation here, Laura.
They have 1,099 technicians. That's a lot of technicians.
I love it. She has 1099 subcontractors is what she's using. And I'm going to touch on that real quick on people who have insurance policies and are using subcontractors, because this is a hot topic right now. It's all over the news. And there are insurance commissioners that are now for 2 years, people weren't looking and basically seeing what people were doing on their accounts. So now what's happening is these insurance commissioners have people that are going and researching policies, and anybody that has any 1099 subcontractors, they're making sure that you're adhering to what the tax laws are. So in in a small way of putting it, a 1099 subcontractor, you're supposed to be able to give a job to with no direction. They perform it when they want, their own time schedule, their own equipment that they're using. They typically have their own insurance coverage. What we're finding out is many of them don't have their own insurance coverage. And what the problem is they're not meeting tax code at all. So basically, these should be employees. They're not employees. People have done it as 1099, and many of them have done it so that they can avoid paying for the health insurance piece of what's going on right now with everyone as well. So we've seen a lot of it. There is a catch with this. Your insurance policies that you have, where you have employees, your coverage is much broader than it would be if you had subcontractors. Subcontractors are supposed to carry their own insurance coverage. So I'm going to give you a quick scenario since the claim came up, but we had a customer where we had some cell phones that were stolen from an office or thrown away accidentally. Had it been an employee that had done that, we have coverage under our policy. It's a subcontractor. The subcontractor's policy is first. The problem is that customer sued the owner of the business, who was the one who initiated the contract.
Right.
Right?
Right.
Turns out the subcontractor didn't have the coverage they needed. And, you know, a lot of times what we'll do, and I tell people all the time, if you're going to have subcontractors, wherever you're writing your insurance policy, that same agent should write the coverage for your subcontractors. You should work it out to where they do it. Because what I'll do on mine, if I have somebody that's canceling and they're linked to another account as a general contractor, I'll let that general contractor know, hey, this person is canceling. You may not want to send them out on jobs, that kind of stuff. And I know what's been written on the accounts. So, and how to word things. So.
All right. So
it's a hot topic right now.
That's a great piece of information. So, and there is no conflict of interest in your position, being able to talk to the owner of, okay.
No, we tell them up front what we're doing. Yeah. We list them as an additional insured on the policy. I do it for my franchisors and franchisees as well. It's just known up front. So, yeah.
How does that impact the cost?
It doesn't. It just keeps everything in line to make sure that they have what they need. But when you have somebody that goes and purchases, like a subcontractor can go purchase their own coverage, they may not have the specialty forms that they need.
Yeah.
So they may just have coverage for basically slip and fall, bodily injury. And we don't get a ton of that, not in the residential. And commercial we do, but not so much the residential piece of it. So it's just a matter of having the right coverage for what you're doing.
Laura, Ashley is asking where she gets a quote. Where should we send her?
Oh, yeah, she can go ahead and give me a call on my cell phone. I can give you both of my numbers. My cell phone is 301-919-8010.
301. Tom's going to post it too.
301.
Oh, sure. 919-8010. And the office line is 800-966-0001. And I'm at extension 3009. Either way, you can reach me. So whatever works for you.
Sorry, somehow I messed that up. It's 800 what?
966.
800-966-0001.
Yes, extension 3009.
All those zeros.
Yeah, I know, right?
All right, perfect. All right, so it's fine. The 1099 issue is not really an issue as long as you're making sure that they actually do carry their insurance. And then the recommendation is just do it under our policy. So
Do you find that how often do you run into a company that is using independent contractors as their cleaning professionals, that they aren't even requiring their independent contractors to have insurance? Do you run into that very often?
I actually do run into it very often. And people just think that because they're subcontractors and they don't have their own insurance coverage, it will all just be picked up under their own coverage. And sometimes that's not the case. It depends on the carrier and it depends on the form. You'd need a form that extends coverage over to what they're doing, and not all forms will do that. And I had seen it more, I would say, over the last couple of years, but the majority of people over the last year that I work with that were 1099 employees have been switching them over to W-2. And I think part of it is they knew that these laws were coming out and there were people that were going to be enforcing things. And there's going to just be a sharper eye. And the insurance commissioners are trying to watch this stuff right now.
Yeah.
So I mean, it's always been an IRS thing going on. Labor, I guess, Department of Labor, to be more specific, wanted to make sure that companies weren't misclassifying, employees as contractors. But now insurance agencies are getting involved in this as well.
Yeah, so it's just because we have to write the insurance coverage for them. So, if you have a subcontractor that is only working for you, and it's at your direction, you're sending them into homes to do cleanings twice a week, let's say, and they're working for you part-time, chances are they don't want to buy their own insurance coverage, right? The problem is it's truly not a subcontractor. It's a part-time employee because you're giving them direction. You're telling them where to go, typically what supplies to use, how you want it done because it's your name. You're training them or they've had experience in doing this. But the IRS is looking at it and saying, no, these are employees. They're not. And part of it is like, where do you put them on a policy? If they were to work for other companies and not just you, then you could really justify, yes, they're subcontractors. They can work for anybody that they want.
Right, which means which shows why they would have their own insurance because they're working for multiple companies, right?
Yeah,
so
absolutely.
Yeah.
So when you say have their own insurance, what policies would they be required to carry?
I always tell people they should carry the same insurance coverages that you're carrying as far as your limits go. And even at minimum, they should carry the liability and workers' compensation. And typically you will get that. It's the other lines of coverage that they don't want to take on. But let me tell you a scary situation that's happening right now. So, if you go to a local Home Depot or Lowe's, depending on where you live, there's a lot of day labor. I don't know if you guys have that where you are, but we have day labor everywhere. I'm in the tri-state area. It's on every corner. So let's say that you had somebody that was picking up day labor and they were going to use them as a helper for the day, whatever they were going to do on a job. If for some reason they're out in doing a job and the sub provided you with a certificate of insurance thinking you had coverage, they did what they were supposed to do, let's just say that policy canceled or it's behind in payment and that day labor person gets injured. If there is no coverage under the sub, the general contractor picks up the workers' compensation claim. So you're picking up a claim for day labor. You have no history on this person. You don't even know who they are. Nothing.
Right.
So it can be very scary. These claims can get the litigation on them. The cost is outrageous. And some of these people, as soon as these claims happen, some of them are moving from state to state. It can get very costly. So I caution people when you're using subcontractors, at least as employees, you know what's going on. These are your people. It's your direction. It's what you have set as far as the rules go for your company.
But if a subcontractor is using day labor and their, say, workers' comp is paid in full as current, then the day labor is covered.
Yes, it is covered with the majority of carriers. Some standard insurance carriers don't want to cover day labor at all, and they could have an exclusion on the policy.
So I'm not sure what the technical definition of day labor is, but the scenario that you just painted kind of makes me believe it's like, hey, why don't you come help me on this job and I'll pay you $150 at the end of the day.
That's exactly what it is. Like, so you have somebody that's doing an office clean and they are like a clean out of a vacant office to get it ready for the next tenant coming in. They may pick up day labor to go take care of that. So,
but there's no paperwork filled out. There's nothing. It's just,
nope.
Here's $150 at the end of the day. Thanks. Appreciate the help.
Right. And but if they're injured and something happens, they go to the hospital.
If they get hurt during that day, it's like, well, I'm not even sure who they are. That seems like that would be a complicated claim to file.
They're getting them filed.
Okay.
We've had quite a few come in. Yeah, it's crazy. It's crazy. So it's making sure that these subcontractors have insurance, that they're staying on top of their insurance. But, you know, like I tell people, even that have people that are using their own cars in their own business, you could check insurance on somebody today. They can give you their insurance card, but tomorrow they could cancel. And a business owner has no way of knowing that. So it's a very similar situation to that.
Yeah. You're just scaring us today, Laura.
Well, I don't mean to scare you. I just want you to be aware that it's out there.
Yeah.
And then there's ways to fix it with insurance policies, or try to set yourself up to do things in a way to where you're not in these pitfalls.
Right. Okay.
Yeah.
That's better. There's our encouragement. All right. I have another question. You mentioned a lot about forms.
Uh-huh.
You've mentioned them multiple times. What are forms?
Yeah, so I would actually love to talk about this. So in our world,
Insurance, you weirdo.
I'm an insurance weirdo. In our world, many policies will cover liability for slip and fall. But what's going to happen mainly in a business that's residential or commercial, something's going to get damaged. Commercial, we do see slip and falls, but not so much in residential. But we see property damage in a customer's home or at a customer's location. We have theft claims. We have lost keys. And we have hired and non-owned auto claims. Those are the main ones. And many policies that people have, they might have a straight general liability policy. So when they're giving a certificate of insurance to one of their clients, it says I'm insured and I'm bonded. And a homeowner, and many times a business owner, has no idea what that form covers, right? But many of them, it's just strict liability. Like if you were to cause liability, bodily injury to someone, which the chances of it happening are slim to none on a liability policy. So what happens is most of these insurance carriers that don't specialize in your world, they exclude this coverage from the policy as far as property damage. So if you damage something in a customer's home, they're like, too bad, that's on you, or a customer's office. So many of the policies that we have special agreements with, many of them have $1 million of property damage. The minimum one I think I write is $250,000 of property damage. We have another one that we're considering the lower limit, but I really don't want to take it on. But when you do something in a customer's home, you scratch a Sub-Zero refrigerator, you scratch countertops, you damage, new flooring, and all of the floor has to be replaced, it can get pretty costly. So all of our policies have a $500 deductible. Nothing under $500 goes to these insurance carriers. And we do that for a reason. We don't want small claims going to the company. If I even have something that's close to 500, under 1,000, I'm trying to work it out with a homeowner or helping a business owner try to work it out to where it's not going to the insurance company. We got to figure out another way to do this. Maybe, to offset it with cleans or to do different things. But in addition to the property damage, you could be dusting a flat screen television and it falls off the wall. So it's also your care, like what you are responsible for while you're working. And those two specific things are typically excluded out of most insurance policies. You have to buy them back. And on our forms, they're automatically included. So another form that is included is lost key coverage.
Define a form a little bit. When I think of a form, I think of like a job, the old-time job application, a piece of paper here. My name goes here. When I go to the doctor's office, they have me fill out a form.
Yeah.
You're talking about like a preset menu of items,
kind of like IRS
and stuff.
901.
Exactly. So when you get your insurance policy, you usually have your policy declaration page that lists your name and your typical coverages.
Yeah.
And then as you're going through it, they will have a section, pretty long section, of what forms you have included in your packet. And those forms are the details of what coverage you have or don't have. There's a lot of exclusions. So when you're looking at your actual forms, it's about reading them. And that's why when I do a coverage review for someone, I don't like just the declaration page. I want to read the form, because sometimes an insurance company will go in and manuscript something. They'll write their own language, on a form, and I want to see what they're saying when they're doing it. Like, have they removed something that my customer needs? Is there a way to buy that back? Can we change the policy to come back and include the coverage? So that's what a form is. It's an enhancement to the basic policy.
And a lot of agents will just kind of write the boilerplate and be done with it. And then you break something, you damage something that falls under care, custody, or control, and you're not covered and you're paying out of pocket. So why do I even have insurance?
Right. And people get very frustrated because, they've paid all this money, and I understand where they're coming from. They have paid all this money where, at some point, I think that at some point, agents in general need to do a better job in what they're selling. It's a catch-22 in our industry. You have people that have done it for a long time and there's care with it. And then you have people that come and go constantly. It's hard to find, a same sales rep at an insurance carrier for more than a couple of years. So it's how it is. They just think they're moving on. So when you have, like yourselves, ARCSI is a great example too. When you have trade associations and you have training and you have these groups of people that can talk about the same like businesses, I think that's the best way for a business owner to find out what they need or what they're lacking or the best of whatever in an area, because that's where you pick up what you need, what you have to have. And a local agent that is down at Allstate might think they're doing the right thing, right? And they're not, and they may not know that they're not doing the right thing.
Yeah.
So,
I mean, that's a valid reason to belong to an association like
absolutely,
ours.
Absolutely.
Last week, our guest, Laura, was Bruce Vance.
Oh yeah, yeah.
Bruce was sharing a story where, back in the day, they were cleaning a marble floor. They put an acid on it. It was damaged, and his insurance didn't cover it because it didn't meet the care, custody, or control, requirement. They should have known better. They were the professionals. So, the whole thing of what they call a willful damage rider. Yeah. We talked about that a little bit. Mm-hmm. I presume that's what you're talking about, that automatically comes along in some of the forms that you offer.
Absolutely comes along because things happen. I mean, things happen. It's definitely covered. I tell people, one of the great things about working with a trade association is that I get to see all of the training that you all do, right? I am fortunate to where I can go back to these insurance carriers and these underwriters, and I sell these programs to them. And I'm like, these people have specific training. They are very fortunate. They can get on the phone. Anyone that works with you all can get on the phone, ask questions, and they have guidance. It's not a Joe Schmo that's just starting a claim company on their own and think they know everything. It's not how it works. And I deter a lot of people that call for quotations or do things until they will go to a trade association and work with them. But because of what we've been able to do, many insurance companies in the day used to say, you have to be in business for 3 years with insurance before we even look at you. So for many years, businesses had to go high risk for insurance because that was their only option. But when we started looking at this and saw all the training that was given, we were able to negotiate these policies. So for us, new business coming out the door, as long as they're affiliated with your groups, we're able to do that without prior business insurance because they're getting training. And it's a big deal for somebody because it could be a third of the cost annually of what they would normally pay.
I think that is a point that is often overlooked when people are trying to decide, do I want to make an investment in a trade? In ARCSI, let's to be specific, that it makes you more insurable.
Absolutely.
And even if you're an established company, would underwriters look at your participation in ARCSI and maybe give you better rates?
Yeah, absolutely. So ours is basically underwriting requirements, but the best part of it is the program that we have right now through the one insurance carrier. We don't have a general liability audit. So basically for our clients, they give us a snapshot of where they are with payroll exposures for the beginning of the year. I check with them quarterly because I like everybody to stay on top of things for their workers' comp. But at the end of the year, if their premium, if their exposure has increased on their general liability, we don't have an audit. There's no audit. It's a big deal. So some insurance carriers that I represent, they do audits. They do general liability and they do workers' comp. We can't get away from the workers' compensation audit. The states aren't having any part of it. But the general liability piece of it, 2 of the programs that I have, we don't have audits on them. And it's important because when you're starting a business or when you're trying to gauge where you are this year, COVID was a good example. Many insurance carriers wouldn't let us reduce or wouldn't let other agents reduce exposures on policies. Well, we had people that had reduced exposures. They didn't have as much business, or they were trying to gain business in different portions of their business where they were. And we were able to reduce exposures even on these policies that had no audits. So it's just a matter of how you can work with these carriers and how you can help a customer. I'm like, if it was you, wouldn't you want somebody to do that for you? And that's how we sold it with them. So our policies are very different than most policies. We write the leading type of bonds. We make sure that we include, I was going to say 2 other coverages that we have are 3. Loss key coverage is 1. So we've had customers that we've had to rekey a home or a business. The businesses can be pretty expensive to do, but we had one not long ago. It was around $8,000 where we had to rekey because somebody had gone to lunch, accidentally misplaced a key. It happens. And we had to file a claim under a policy. And we had coverage for that. The other is the third-party dishonesty bonding, which I can't say enough about people having this coverage, but the third-party dishonesty is for theft. Everybody should be pulling a background check on anybody that they're bringing into their organization. I tell everybody. It's part of my program and I require it. I don't need to see it. If you have questions when you get it, if there's something on there, because sometimes you're going to see some crazy things on there. Most of the insurance companies are looking at drugs, theft, and dishonest acts. But if there's anything else, it's a game on. You can still hire these people. So I tell people, if you're going to put them in your home and they don't have those 3 things, then they're welcome to be hired. Yeah.
How about if they have like a bunch of traffic violations? Might that be a concern?
Yeah. So, well, under the bonding coverage, the driving record doesn't count at all. So that person can still work for you. If they have a bunch of stuff on their driving record in the last 3 years, they may not be able to drive for you. So it depends on how the business is set up. If you're set up to where you're in teams and somebody can drive with somebody, they're still bondable. But our bond does not have a conviction clause, which means we don't have to wait for a court of law for coverage to apply. If we think somebody did something, like you take a brand new person, you put them in one of your customers' homes that you've had for years, and all of a sudden things start missing. And it's the repetitive of that same person and customers' homes moving forward. We do the same process where we have them report the claim to the insurance carriers, the police department. We get it filed, but we can have it paid. We don't have to wait for court conviction, which in some states can take 3 years. It's no joke. It's not fun to wait on these. As far as the background or the driving record checks go, I'll tell you what we've been seeing is everybody has a little something on their driving record. If you don't, that's wonderful. But everybody usually has a little something. It's a speeding ticket, an accident. But anybody that's got 2 things in a 3-year period, it doesn't matter what the 2 things are, we're finding that they're leading to the largest workers' compensation claims. Largest. So I tell people, if you have people that are working for you that have not so great driving records, if there is a way for them to team up and be teamed with somebody who can drive other than them, even when they're driving their own car on your behalf, you want that because they're the ones that are leading to the work comp claims.
Are the higher work comp claims associated with automobile accidents?
Yes. Yes. Hands down. Hands down. Huge, huge claims coming in on that. And what I will say with the hired and non-owned, everybody every 6 months should be checking to make sure that you have that everybody has their own insurance coverage. And like I said earlier, an employee can give you coverage today and it could be gone tomorrow. But what happens is with the hired and non-owned auto coverage, their insurance coverage comes first for anything, any damage that they cause. And if they do not have enough coverage, let's say they chose the minimum state limits, or if they just don't have a policy, maybe they let it cancel, you then become primary as a business owner, your business. So under our policies, we usually write $1 million of hired and non-owned auto liability. It's not for the employee. It's not for the employee's car. It's for if you were brought into a lawsuit. And we have seen that coverage more over the last couple of years than we have in the past. It's usually when we're on a downturn with economy and people are paying their rent instead of paying their auto insurance, and it just happens. But make sure that you have hired and non-owned auto on your policies.
So you're talking about limits, and I guess that's a whole nother dimension of this. And I guess the limit implies that the insurance would pay a loss up to that amount.
Yeah. So our
How much
policies
insurance do we need?
You need it. I would say that you need a limit of $1 million, depending on the size of your business. So as your business grows, your insurance should grow with you. So I tell people, when you start a business, you don't buy everything for the insurance. You'll go broke. You need to make sure that your business is going to be able to sustain all the expenses and the employees and everything that you've got going. And then as it's growing, your agent should sit down. A lot of times they're doing this remote even. We do all of our stuff on the back end, like 90 to 120 days out. So people don't even see it. We'll get renewal updates from our clients, and then we do shopping, reviews, everything on the side. And then when our customers come up for renewal, we usually put out whatever the best rate, best coverage forms that came through were available. And sometimes we're even sending 2 proposals out because it's a customer's choice of what they want. But I tell people all the time, you may not take an umbrella the first year, but after that, you pretty much need $1 million umbrella after as well. And anybody that's on this call, if you have personal insurance, auto and renters or homeowners, you need an umbrella policy as well right now.
Explain what an umbrella policy is.
Yeah, so it's an excess liability policy. So it gives you extra limits of coverage. And many of them are a follow form, but some forms that are standalone that you write, which means it's a policy just by itself. It has nothing to do with like your package or your business owner's policy. It's just by itself. Some of them give broader coverage, like libel, slander. There's a bunch of forms that are included in that wording that is excess over what would normally be under a regular liability policy. So everybody has to have an umbrella. I don't care where you are.
And you're talking about personal, like for your part of your homeowners, that whole thing.
Yeah, and if you're a business owner and you've been in business for a year, if you're seeing your business is growing, you need to have umbrella coverage. It's not an option.
You need 2 umbrella policies, one for your personal and one for your business?
Absolutely. They're 2 separate things. And that was one of the things I was going to talk about today. I'm sorry I didn't get to this stuff, but what we're seeing is everybody that ever goes to sign, it's one way to protect yourself, is that we've been seeing a lot of leases come through for vehicles, for property, that people have put in their personal names. So what I'd like everybody to do, whoever's on the call, is to go back and look at your leases, look at your equipment for your suppliers, look at everything that you have. None of that should be in your personal name. None of it. It should all be in your business name. If there's a way for you to transfer it over to a business name, you want to do that because you don't want to take on that personal liability yourself for the business. And especially with the autos, because many people are putting a personal vehicle on a commercial policy. And right now, our rates in the United States are probably some of the highest rates we've seen on auto. If you haven't seen an increase on your auto insurance, you will be. And what I tell people, the personal insurance policies are less expensive than commercial. So if you are just driving to and from work and you're a business owner and you have that car titled personally, you need to put that on a personal policy. If there is any type of wrap or signage or anything that you put on the car, then you need to put it on a commercial policy. Or if it's in a business name, you need to put it on a commercial policy. But right now, with the craziness that's going on with costs, it's something to consider. If there's a way for you to save some money and put it on a personal policy, many insurance agents can still add that hired and non-owned auto coverage that we were talking about on a business owner's policy. You don't have to have that owned auto component a lot, just for now. So
auto insurance rates are going to be going up. just
Yeah. If you
national.
haven't seen it this year, they should be. Yeah.
How about workers' comp, GL? How are those rates fluctuating?
I've actually been seeing them steady in some states. New York specifically is one. California is another. The liability rates are increasing, and it all depends. Workers' compensation rates right now, the highest state is California. But part of that, it depends on if you are in an employee-friendly state. And what that means is if the laws are very employee-friendly and the insurance companies have their hands kind of tied of what they're allowed to do. So, every state's a little bit different. So that's not just I know that doesn't answer fully your question, but rates I've seen rates from anywhere from 3% maybe to 8% on an increase. But it's not every state. And some states are higher than that, depending on, and then it's based on loss history too.
Okay. So
you guys always confuse me when you talk about that because we don't have workers' insurance, right? Ours is all state run.
Yeah.
So like, what? Yeah, so it's through your insurance? It's so confusing.
It's so neat. And I'll tell you, it's kind of nice because New Jersey is the same way. You have to purchase it directly through them. Or you can get them, but the rates are set the same in New Jersey and Florida. Everybody has the exact same rate. Nobody can have a different rate. Wow. But what they've been doing with plans where I have access to them, they might add a dividend plan. So depending on how somebody's claim history has been over a policy term, that business owner may get some money back in a dividend because they've had good claim history. So there are some things that they're trying to do to kind of make it a little bit competitive, but in your state, you have to purchase directly.
Yeah.
So.
But are you saying if you've got some losses, you don't have a higher mod factor driving your rate up?
No, everybody has an experience mod factor. Sometimes if the state has their own way that they calculate it, but the majority of the states are on what's called NCCI, the National Compensation of Insurance. They determine the experience modification factor. And that factor, so everybody's starting on workers' comp, everybody starts with the same rates. It's the book rates that are filed in your state with the insurance commissioner. And if you're in a competitive state, for instance, Maryland, we can shop it wherever we want. Everybody can have different rates. The insurance company has to approve those rates before they're even able to be used. Your experience modification factor is based on the last 4 years of your business, with the most recent year not counting, because they want to give you some time if you have had an open claim to close it. And then it's rated based on the prior 3 years, and it's based on premiums paid, what your losses should have been versus what your losses were. And that's how they determine these experience modification factors. But they've put a wrench in things because over the last few years, when they changed how they calculate it, it's also based on frequency and severity. So before, severity wasn't so bad, right? Because you could have a $50,000 back claim. Somebody falls down the steps and hurts their back. And they had to cap that loss when they were figuring out the factor at $5,000. And now they don't do that. Now it's a higher limit whether they cap. And frequency comes into play too, more so than anything. So like somebody who has small little claims that are turning them in, they count, all of them count.
So I guess if you have small claims, the thinking is you're more likely to have a big claim. It just hasn't happened yet.
Right. That's what their thinking is.
It totally makes sense. I mean, I would think that way too, right? It's just a matter of time. You keep turning in all these claims. We've just been lucky that they've been small.
Yeah.
So,
all right.
So when we started, our discussion, you kind of explained, the various parties that are all involved in this insurance supply chain. And, you're the broker, you're the agent, you actually are an advocate for and work for the cleaning business.
Yes.
And you're on team cleaning business. You are not on team insurance company. It's kind of like you're the same as, I mean, not literally, but in a figurative sense, like the attorney, like the CPA, you're an advocate helping the cleaning company.
Correct. That's my goal, is to be an advocate for my clients. Yes.
So all of this magic stuff that we're talking about, and it all matters, NCCI, mod factors, loss runs, do I have the right, riders on my form and all of this? That's what Laura does. And that's what your insurance agent should be doing for you.
Yes.
How much interaction should a cleaning company be having with their insurance broker, the insurance agent?
It depends. So in a year, typically, some of my clients I don't see except for once a year. Sometimes I don't talk to them except for once a year. Everybody has my cell phone number, so everybody calls if they have problems, right? And that's the biggest thing. You want to be able to pick up the phone and talk to a person or a team member that is as experienced and can answer your questions. But you may have somebody that is new in business that may have more frequent questions. They're not sure how claims are filed, or they may not understand how coverage works, or driving records, or background check questions and stuff like that. So it depends on, a lot of experienced business owners, they have a lot of this behind them. They've done it before. They know what to expect. They know different things, but I always tell people you should always select the agent that you're comfortable with, that you can pick up the phone and have these conversations with. And your agent should be the one that is doing the work for you. You should fill out one set of applications, one set of everything, and let them do the work for you. You shouldn't be going or having to go to a whole bunch of different places.
So when Mrs. Smith calls and says that she has a diamond ring that's missing, or one of your cleaning techs falls down the steps at Mrs. Jones's house, or there's an automobile accident and you don't know what to do, pick up the phone and call your insurance agent. They're on your team. That's why they're there, right?
Yeah. And some people, they have what if questions, right? They're not sure if there was a theft. They've only had something reported stolen at one person's house, and they haven't had any other reports of anything else. But what I tell people is we are in desperate times, right? So there are a lot of people have worked with them for years and years and years, and nothing's ever happened. And all of a sudden, now there's a claim. So you can't ever say never. Just things happen, right? And it's the point of having the coverage, but what do you do? And usually, like for a situation where a theft, is I get the police involved. And I tell a business owner, you always want to be the squeaky wheel. You want to be the one that is proactive with the police department to have the interviews done, to have the stuff done, because it shows, one, that you're invested in your business, right? The employee knows, one, that especially if they didn't do it, that you care, that you're trying to get this resolved.
Yeah.
Because honestly, a cleaning company is blamed for many things that they don't do, right? Teenagers in a home, parties in a home, other contractors in a home. There's stuff that is not anybody's responsibility but other people. And, it's a balancing act, trying to figure out what we really have to take care of or not take care of. So a lot of times I wait and say, depending on what the police department finds is how we're going to file. If we file a claim, if we're going on their direction.
Okay, cool. I love that. I didn't know that. One thing I love that you keep mentioning over and over again, Laura, and actually I like the word that Tom used, that your insurance agent should be part of your team.
Yes, definitely team.
Yeah, I don't think people think of their insurance agent that way most of the time. They think
they're afraid to tell you what happened.
Yeah.
Yeah, and you have to be able to call somebody and know that it's not being reported to an insurance company.
Right.
So legally, I'm supposed to say that all claims have to be reported to an insurance company, but we all know what that means.
Okay, it's just us talking. Nobody's listening.
Right. So,
but really, a question is not a claim.
No.
This situation, that's not a claim. We don't.
Hypothetically, if this happened, what would I have a friend, and let me tell you what happened to them.
Yeah.
Well, and isn't a claim that means that I'm claiming that this thing happened and that I'm responsible for it? That's a claim. The definition.
Well, not necessarily. We have people, like we'll have sometimes a homeowners that wants to file something and they're adamant. And if you've given them your insurance paperwork, a certificate of insurance, I tell people be very careful who you're sharing your insurance certificates with, because they have access, right? They can actually file directly with an insurance company. And we don't want that. We don't want the insurance company finding out about a claim before we've reported something,
That's a good
right?
question.
So if we think that they're going to call or there's going to be a problem, we can call and say, we are not taking responsibility on this. But I have to tell you, when it comes to property damage, it's different than theft. But when we've had people call and there's been property damage, like somebody bumped into a shower door when they were cleaning, and it was a small bump. It shouldn't have broke the door, but it did. In this case, it broke it. And what happened is the bathroom was new, and the contractor probably hadn't installed the door correctly. But our client, my customer, was the last one to touch the door.
Yeah.
An insurance company has the right to settle when we call. So we have to be careful on what we're putting in.
Right.
Yeah.
So if you have a customer who asks if you have insurance, and if they're knowledgeable enough to request a certificate of insurance, and if
That's
your
curious.
the company could call you, Laura, and say, "I get Mrs. Jones wants a certificate of insurance," and you would issue that to her, I guess.
Yes. Yeah.
Are you suggesting, though, that we shouldn't offer that? Just kind
I'm
of.
just saying, like, if it's new business and you're in an expensive neighborhood, you can probably count on them calling, right? Or if they're in a 55 and older community and they've been told that they have to get an insurance certificate for everything that's being done in their units, that's different. But if you have somebody that's a random that shouldn't probably need a certificate, you just have to kind of question it.
Right.
Yeah.
You want to be a little cautious there. So
Yeah.
I'm an insurance nerd too, in my own way, and you're not going to work for me unless you give me a certificate of insurance. But
See?
that's,
I tell people sometimes it's nice when you're doing your presentation to show a sample certificate, like you keep it, but it's in
Right.
your binder, but it's not something that has their name or your policy information on it that they're getting.
that's
It's just something that you're presenting. That's it.
I like that.
Yeah.
All right, that makes sense. Okay, I do have a question that I wanted to ask since the beginning, and I haven't found a place to sneak it in there yet. So I have heard from a few different people that we should be more concerned about getting a new type of coverage for like internet theft, or like if somebody gets
cybersecurity type.
Cyber and data breach. Yes.
Yeah.
Yes. So I have to tell you, people that don't have those policies, some of them have some coverage that are built in a business owner's policy. The policies are available. We actually have a cyber checklist. It's like for your business, where you can look through it and see where you are as far as risk, how much risk you have. And I can send that to anybody that's interested. They just have to give me a call. But the cyber coverage, it is for data breach, and it's basically sensitive information that somebody gets access to, whether it's intentional, not intentional. It just, Target is a good example. When their systems all went down with everything that went out that was floating as far as the information. But the problem is that we're seeing these policy limits, they're so high, and underwriting is so behind with every insurance company we work with. So here's what I tell people. You want to do this risk assessment. You want to see where you are, and you want to make sure that you can answer coverage questions positively, that you're doing things. And if you're not, you want to fix that first before you apply. Because what's happening is some of these insurance carriers will not let you apply again for 6 months.
Oh, okay.
So that's why you do this risk assessment first. Make sure.
And I would assume even if you aren't going to get the cyber insurance, it would be smart for you to do the assessment.
I think so, because, then you might want to just have it on your own. And a lot of people say, well, I don't have to do that because I have a cloud administrator that's taking care of all my stuff. That's actually not true. The cloud administrator, they have a cyber policy, and they are the named insured on the policy. You're not. You're their customer. You don't have that cyber coverage.
And there are a lot of best practices where, I've seen companies like take personal information and put it in a spreadsheet somewhere, or credit card number.
Exactly.
I mean, there's a lot of things that people are doing that I've seen that from a cybersecurity standpoint is not an awesome idea.
Yeah. So one other thing I want to touch on too, because I think, Liz, you're going to have to go, but employment practices liability is one of the other hot topics that's out there right now. Some business owners' policies include a little bit of coverage, but what I want to tell people is employment practices liability. Some examples of where it would cover is for harassment, failure to promote, wrongful termination. We're seeing a lot of that. Sometimes it comes in play with an application process where, you hired so-and-so over so-and-so without legitimate cause. So there are standalone employment practices liability. They normally start around $1,000. You can pick different limits of coverage. But when you get a standalone policy, you also, through our office, get access to the company attorney, or attorneys. So let's say that you had a problem employee that you were trying to get out of your office, and you want to make sure that you are doing everything properly. You could actually pick up the phone, call the attorney, and make sure that you have all the documentation that you need to get them out the door. So it's a peace of mind policy that people are purchasing. But I tell people all the time, it is not that these insurance companies want to pay these claims, because they don't. And not a lot of them do, right? You have to have legitimate cause. It is the cost to defend yourself. It is $500 to $800 an hour for an employment attorney. So that's where you get your value, is by having somebody that you can talk to where you wouldn't have to call an attorney. So
Yeah.
Just to keep that in mind. That's another hot topic right now. A lot of insurance stuff.
Yeah, I feel like we could talk easily for another hour.
I
So,
know. It's terrible. I
so
know.
Laura, I guess just to go ahead and wrap this up, we've already put your phone number and office phone number in chat as well. Is that the best way to reach you?
Yeah, absolutely.
Okay.
I only see the one number showing up there, Tom.
You need to scroll up. It's up there.
Is it?
301-919-8010.
Yes.
That's the only one I see. I don't see the 800 number.
It's down below.
I
800-966-0001, extension 3009.
Yes. Yeah.
I don't know why I can't scroll. That's so weird. All right. Well, it doesn't matter. As long as everybody else can see it, that's what matters. All right, y'all. I have to get out of here. I have an appointment in 2 minutes.
It was great talking with you guys.
Laura,
Thank you so much for having
This
me.
was useful information.
Always
I'm glad.
to have you here, Laura. Yeah, I'll be reaching out about that risk assessment.
Yes, absolutely.
So you guys have a great rest of your week. We'll see you next Wednesday, 5 o'clock Eastern. Until then, bye-bye.
Take care, everybody. Bye-bye.